Welcome back to Rockstock Channel. It is Friday, October 24th, and we have two interviews today. One we did a couple of days ago with Rodney, Matt, and me, and Ernie Ortiz of Lithium Royalty Corp, which is a sponsor of this channel. And today we have Kobe Kushner of Libra Energy, who we interviewed in August. New exploration story, originally just in Canada, but they recently made an acquisition in Brazil, which we're going to dig into today. Before we do that, I just want to thank our second sponsor, USCF Advisors, which is been a pioneer in the ETF space for a number of years, and have 15 plus funds, including the Sustainable Battery Materials ETF, ticker symbol ZSB, which invests in metal derivatives instruments and equities exposed to the electrification thematic, including holdings in aluminum, copper, cobalt, zinc, lithium, and silver futures. They also have a copper product, CPER, which is a way to bet on the copper price, among other ETFs. So we'd encourage you to visit their website, uscfadvisors.com. For disclosure purposes, RK Equity is an advisor to and holds equity interests in Libra Advisors and, Libra Energy Materials. Libra Advisors is an old hedge fund friend of mine. We're going to speak about a number of stocks in this podcast, but nothing is financial advice. We are not investment advisors. Please do your own research and read the disclaimer at the end of this video. And with that, we're going to have Ernie first, and then Kobe. Welcome back to Rockstock Channel. It is Thursday, October 23rd, and today we have back Ernie Ortiz, who had joined us, I think, last month. But Ernie is the CEO of Lithium Royalty Corp, which is a sponsor of Rockstock Channel, and we're an advisor to the company. But Ernie pinged me last week. He was marketing the fund, but also doing some due diligence in Western Australia. So he has some fresh views, following visits, I think, to Core and maybe Minres. Then we're going to kind of dig into that. Just as a reminder, nothing you're hearing today is financial advice. Please do your own research, read the disclaimer at the end of this video. You could follow Lithium Royalty at lithium_royalty on X, and you could visit their website. Ernie, the website is lithiumroyaltycorp.com, I think.
Correct. Yes.
Okay, excellent. So welcome back, Ernie. Rodney and Matt, you are joining me and have a bunch of questions. So I'll let them dig in. But I also want to flag, just before we're about to start Lithium earnings season, I saw Dale Henderson gave an interview on Bloomberg, but I think they report today. Ernie, you're reporting somewhere around November 4th. So there's going to be a lot of information put into the market in lithium. This will very much be a lithium focused conversation. But this is a good prelude to earnings season.
Great. Thanks, Howard.
Great, Ernie. Good to have you back. Just looking through, you've had quite a lot of news flow. One of the key ones is that Zijin has just put the 3Q project into production. That's Catamarca's third lithium mine. The initial production target is 20,000 tons. Phase 2 could add another 40. So a meaningful size project. You've got a 0.9% gross royalty. How meaningful could 3Q be to LRC's revenue?
Sure. So I think it's good. It's quite meaningful, and maybe not so much for 2025, but we think for 2026, as the asset ramps up in a material way, that should drive the revenue growth for us in 2026. And ultimately, we think it is pretty impressive what they've been able to do. So recall Zijin acquired the asset from Neo Lithium in early 2022, and call it 3.5 years later, the asset is now in production, in the middle of a price decline of, call it 85, 90%. So it shows their commitment and their expertise. And being able to deliver projects to market. So that's right. On September 12th of this year, Zijin held a ceremony to start the asset and officially kind of commence production. You're right, it's 20,000 tons for phase one. And we are pretty encouraged by the expansion potential of the asset. So before, I think they had thought about a 30,000 ton per annum expansion. Their latest press release and commentary is to expand that by 40,000 tons. So that's additional value to the LRC shareholder. And equally important, that is a pretty significant asset for us in that, according to consensus, it's roughly 20% of our net asset value. So it is a key milestone for the company, especially in light of being at cyclical lows and our portfolio continuing to progress. And while I can't comment on our own third quarter, given we're in blackout, I can point to Triple Flag, who we sold 50 basis points at the beginning of the year of the royalty, and they commented that they expect revenue, or they recorded revenue in the third quarter from this mine.
Okay, so that's great news. And then if we look at Cesium, Ernie, that's become an interesting add-on to lithium for power metals and grid in Canada. How are you positioned with those two to benefit from a Cesium uptick?
Sure. So one of the nice things about our royalties is that they normally cover all metals, and typically we're focused on the lithium. But given a lot of these are LCT pegmatites that have cesium and tantalum as well on within the ore body, our royalty position does cover cesium at the Power Metals Case Lake project. And just given the downtrend that we've seen in lithium, I think it's clear that Power Metals has prioritized their cesium business, which makes sense. And so we do have a 2% gross revenue royalty with Power Metals. You guys have been covering the story quite well, but they did hire Canaccord Genuity in January of this year to advance the strategic review and essentially look at strategic partnerships, which they recently commented that they're in the final stages of discussion. They're still guiding to starting production in 2026, which we think is doable given it's a relatively simple quarry type operation with low capex. So we have yet to see the actual operating metrics. So once they release those, we can provide a sensitivity as to what that would mean for LRC itself. But we do have a 2% royalty. They do have a very substantial resource already of 13,000 tons. And we would note that the cesium price itself has been performing quite well. I think just in the last month, it's up 45% or so, according to SMN. So I think the outlook for cesium remains very strong. Power Metals is likely to be the first to market of the kind of new cesium discoveries we've seen this cycle. And that should be an additional revenue producer for LRC that likely starts at some point next year.
Right. And one of your other portfolio companies, Ernie, Core Lithium, has released a restart study for the Finniss project. Have you visited site in Oz, and do you have some sort of guidance to the viewers as to when that project might come back online?
Yeah, so that was one of the principal reasons for our trip down to Australia about a week and a half ago. So yes, we visited Darwin, and then we visited the Finniss site, and we also met with Paul Brown, the CEO of Core Lithium. And overall, I think the trip kind of confirmed our view that it's a great quality asset with fantastic infrastructure. We think very highly of Paul. We think he's a seasoned operator with a lot of experience. Recall, he was the head of the lithium business for Mineral Resources when they were ramping up Wodgina and Mount Marion. So he has specific experience with lithium assets, which is experience that's hard to find just given how nascent the industry is. But in the visit itself, and we have visited the site, of course, in the past, but it just did reconfirm that the asset is in a very strong position. The Darwin's the closest port to China within Australia. the actual mine is very close to a well-paved highway, a sealed road. The DMS plant is fully built. Of course, with the restart study, they are looking at making some improvements, particularly with the screens, modifying some equipment, and trying to improve the overall crushing. But they also are looking to rectify some of the blast patterns that they think could be optimized in a potential restart. But like I said, overall, the foundation of the project remains very solid. The ore body is coarse grained, produces high grade spodumene. There's been a lot of upside already for us. We acquired the royalty when the asset had 10 million tons of mineral resource, and now it stands at 48.5 million tons. And I think we got additional comfort and confidence that there's probably going to be additional mineral resource upgrades. There's multiple pits that have yet to be explored and provide a lot of upside optionality. So I think that was encouraging to see. And as far as the restart, I think they're making very good progress. So as we saw recently, they raised $50 million, probably one of the largest lithium capital raisings in the last 2 years or so. So that was very encouraging that they're seeing the market support. They also have engaged Morgan Stanley Australia to lead the restart financing process. And importantly, there's been some updates on that in that they now have been able to fully unencumber the offtake. So on a restart, they'll have 205,000 tons of unencumbered offtake, which they can potentially get prepayment financing. So I think they're in a very strong position, being probably one of the quickest to markets on a potential recovery. In that they have unencumbered offtake, fully built DMS plant, fully permitted mine. So and with a great management team and very easy logistics. So I think we're optimistic that we'll be finding out additional detail on the restart study in the next couple quarters.
And Ernie, as I understand it, obviously the issue with Core early on was it was quite a high cost asset and had to close down when lithium prices fell. But as I understand it, the restart study is on a different part of the ore body, and it's going to be much lower cost. Is that your understanding as well?
Correct. So they're optimizing the mine plan and now fully engaging or dedicating themselves more to BP33, which is a nice single ore body going underground kind of straight away. It's a high grade. It's about 10 years plus mine life initially for BP33. So that's something that's changed versus the initial plan when they were just trying to get speed to market. So they were dealing with the Grants open pit, but they've also identified some operational improvements that that can occur to lower the cost of the operation. And of course, I think having Paul, who's worked at ramping up lithium sites in the past, I think his operational expertise will be able to deliver those lower costs.
Okay, thanks very much. And if I could just butt in again, you obviously visited a couple of mines in Western Australia as well. Did you have any sort of interesting feedback as to what's going on currently in the WA sort of lithium industry?
Yeah, good question. So I think overall, the growth capex is very minimal, and maybe that's not unique to WA. We've seen that with Albemarle and a few other producers where they've cut down capex significantly given prices where they are, and the prices don't justify kind of reinvestment at these levels. So I think one of the feedback or discussion points that we learned kind of through meeting different miners is just when the market recovers, what's the strip ratio and kind of what's the pre-strip going to be involved? Because a lot of producers could be focusing on the higher grade portions and the actual ore of the deposit. So we have to be mindful of maybe the waste component for once the market recovers and the pre-strip involved, and maybe the capex required to do so. So that might be an impediment to getting a lot of tons out quickly in a market recovery, just given the capital investment required. So that's not kind of specific to any individual miner, but probably something that we're seeing now, just given the low prices, and probably something that we see across commodities in a downturn where you want to get the lowest cost tons possible during the downturn.
Cool, thanks.
And then Ernie, just the last one from me. You guys, LRC's done some buybacks of your own shares. You've done it at great prices relative to today's spot. Can you just give us a high-level overview of how that program's gone and what sort of volumes are involved?
Sure. So we did close on the transaction with Triple Flag at the beginning of the year. So we sold 0.5% of the Tres Quebradas royalty for 28 million US dollars. So on the back of that, we announced a substantial issuer bid on March 20th of this year. And our thought process was we have high conviction in our portfolio. Essentially, buying back shares was a way to buy more of the assets that we already own, which we have high conviction in and strong confidence on. So we ended up acquiring about 561,000 shares at 570. That was on May 15th. And then during the second quarter, we also acquired additional shares through our ongoing buyback program. So in the end of the second quarter, we bought back in total about $4 million Canadian at an average price of 562. That was about 9% of the float. And based on comparing it to the closing price yesterday, we've seen a 26% return. And then arguably, if the June ends up marking the low in the commodity price, which indications suggest that that is the case, then I think it was a very good time to be acquiring shares and what is likely the bottom of this lithium cycle. So I think it was a good form of capital deployment, both cyclical wise and also where the business was at that point in time. We also renewed our ongoing buyback program, the NCIB, which is for another 1.2 million shares. So our priority is to acquire additional cash flowing royalties, but we do still see a lot of value in the shares. So it's an ongoing returns-based calculation. So as to how we approach kind of day-to-day buybacks, but we still see a lot of value in the shares, and we have the ability to act given the balance sheet and the authorization that we have.
Ernie, just to dig in that a little bit, and maybe I should have had a longer intro again to LARC, which is, that's the ticker symbol LARC on the Toronto Exchange. You are a royalty company, and like, how are royalties valued in the market for viewers who may not be familiar? But I mean, it's a very successful model in the gold space. But if you're buying back your shares, I mean, was that based on some price to NPV or NAV that you thought was too discounted? So how should we think about valuation and LARC as a company, and you as a company are a diversified way to play lithium, right? With exposure to Western Australia, Brazil, Argentine projects, rather than just buying ETF, you're investing in a royalty product. It's actively managed, but it is a way, if you didn't want a single equity exposure, to have broadly diversified within the lithium space. But so
Sure.
why were
So
you buying? How do you think about valuation and how the market should value LARC relative to alternative investments?
Sure. So royalty companies are normally valued on a price to net asset value basis. And another way of valuing the companies, and particularly royalty assets themselves, are essentially an internal rate of return on an after-tax basis. So those are the two metrics that we evaluated when looking at buying back shares. And those are also the mechanisms that we use to evaluate new royalty transactions. The major royalty companies, to think about the Francos, the Wheatons of the world, they are trading north of 2x their net asset value. We are trading, depends on kind of the which numbers you look at, but say consensus between 0.6 to 0.7 times price to net asset value. And of course, lithium is at the lows, and we think also we're a new royalty company, so that there's a bit of a show me story involved. But I think our expectation is that that discount is unwarranted, and we're not suggesting that what we should trade at over 2x now, but we think there's a path to a premium to net asset value as we continue to execute, and as our assets come online, and also as the lithium market recovers. So price to net asset value is a good calculation and overall analysis that is used in the royalty space. The other one which I mentioned is returns based. So we constantly essentially look at our internal cash flow projections based on the latest information we have on our mines, and using the current market cap, try to gauge for what the implied return is on our cash flows. And then we'll judge that versus any individual royalty that we might deploy capital into. And keep in mind that our royalty diversified portfolio, as you said, 35 royalties, should have a lower risk profile than an individual asset, individual royalty. So based on those two metrics, we constantly judge kind of new acquisitions versus buying back shares. But knowing that there's a lot of optionality in buying back new royalties and cash flowing royalties that could also improve the multiple. So like I said, I think we want to acquire additional royalties. That's the priority, specifically cash flowing royalties. But we do have a strong balance sheet, no debt, $28 million in cash that we think we can do both. So we'll be opportunistic on the shares and continue to add value that way.
And Ernie, you talked about sort of acquiring more royalties. Which particular sort of geographies, lithium segments are you focusing on? I think last time we spoke, you said that your focus was primarily on sort of brines, on spodumene. Would you look elsewhere into more sort of, how should we say, experimental segments? And what about geographically? Are there any sort of geographical regions that you don't have exposure to that you'd like to get?
We're going to continue to focus on the core geographies, which we're currently based in. So key growth areas for us would be Argentina, and then Australia, Brazil, and Canada. We are relatively agnostic now, whether it's brine or hard rock. I think the key qualification for us is how far is it from cash flow, and preferably we're looking at cash flowing royalties or near-term cash flow. We think that's we're at the point of the cycle where we can be selective and acquire good scalable assets that add that cash flow element and would help us, I guess, enhance our free cash flow profile for 26 and 27, especially as a recovery comes. We are open to exploring additional geographies, but it would have to be again cash flowing asset and very heightened returns in order for us to step away from kind of our comfort zone. And we're seeing a lot of opportunities anyways, whether it's in Argentina or Brazil and Australia, that like I said, has to be very high returns or very attractive returns for us to step outside of that. And as far as new technologies or more experimental technologies, we constantly evaluate every opportunity, but by sheer nature of us trying to focus on cash flowing royalties, I would say that a lot of the experimental projects are probably not our priority for us at this time. And of course, we'll still evaluate them and do the proper modeling and so forth, because cycle can recover and things can change with assets quite quickly. But I think the experimental side of the industry is not a priority for us today.
Okay, thanks very much.
Okay, Ernie, you texted me something about Lithium Americas was in the news, and you're in litigation over that royalty. Is there anything you want to comment here about that?
Sure. So maybe just want to remind your listeners that there's been a lot of good momentum with Lithium Americas and Thacker Pass as they're in construction. The Trump administration has been a big supporter now of the Thacker Pass project, and we are in litigation today with Orion, as they have they had a royalty on the project, and we were in contracts to acquire that royalty. Their interior courts ruled in our favor. So there are potential scenarios where we could have exposure to Thacker Pass. The next key event of that litigation is likely the second half of 26 or 2027, which is the damages trial between our litigation. And there's more information on our presentation on our corporate website, which can refer to kind of to the history of the lawsuit. But depending on how it goes, there could be some form of position for LRC within that royalty package of Thacker Pass.
Okay, but you'll find out, around the time that Thacker Pass is going to get into production. So there's probably some, hidden upside or that's not valued, in your royalty portfolio if that eventuates. But anyway, I just wanted to kind of flag
Correct.
that for.
And I think that's the right way to think about it, Howard. Essentially, it's optionality. I don't think any of our investors or our covering analysts embed that in their portfolio, and we're not arguing that they should right now, but it is potential optionality for our investors and for us as that timeline gets closer and closer.
Okay, and you were just in Australia. I think you visited MinRes. I mean, earlier this year, all the talk was we need to see supply cuts coming out of Australia. You haven't heard that so much, but there is a lot of rumors that MinRes has, a process underway, maybe to sell its lithium business. Any intel you could share from your visit, I guess, from a supply curtailment perspective, MinRes or otherwise. And then I'd like to discuss a little bit just some demand data points, market commentary. Tesla reported their earnings yesterday, made some commentary about EV growth as well as ESS. So it'd be just while we have you here, you're following this as much as we are, if not more.
Sure. So on the supply curtailment, without kind of speaking with regards to any particular operator, I think we're seeing strong enough demand that it's hard to see how you would have any additional supply curtailments. Also, I guess we had a big capital raising from Liontown that's going to help support their balance sheet and likely provide additional time for the cycle to recover. So I don't think we'll see additional supply curtailments, although it is possible. We were also in China in May, met with different off-takers and battery companies, and their feedback to us was that they were in search of tons, particularly for 26 and 27, because of the strong demand framework. So I think now with the visibility that likely the worst is behind us, and the growth is pretty encouraging. I think it's doubtful that we'll see additional supply containments, and especially since prices have been starting to bounce, right? Like I think even this morning, spodumene prices are closer to $900 per ton, which is probably slightly above kind of the some of the ASICs for you could look at some of the higher cost mines in Australia. So I think their position has improved. Inventories are being drawn down, and you guys probably follow the same data that we do, but it seems like inventories were drawn down in September. They're being drawn down again in October, given the strong demand. And cathode inventory is only at 2 weeks of supply. So overall, I think the worst is probably over, and I'm not sure that there's a need for any more Australian supply cuts at this point in time.
Okay, great. I know Matt is very much focused on watching those inventories, so good to hear that you're seeing them come down. And then on the demand side, I don't know if you listened to the Tesla call or other data points. I mean, Dale Henderson mentioned this. I think ESS growing like 40% compared to, I don't know, the 20%, or slightly lower, in the EV market.
Yeah, so I think we're very encouraged by the demand we're seeing on ESS, and I think we actually spoke about it on our last chat. And I remember with Matt that there's a lot of different data that you can get, whether it's production or installations, and sometimes they don't actually line up. So it's like we said, it's a lot more opaque market. But from what we've seen, the numbers have been much better than expected. So if you look at Tesla's energy storage business, they were up 60% year to date. If you look at some of the data from ICC-CINO and some of the Chinese-based kind of industry data providers, they're suggesting that production was up 78% year to date through September, and shipments up 100% year to date. So, like I said, I think it's probably prudent to look at an average as opposed to all the various kind of figures, because they can be quite different. But either way, it does suggest that this year is going to be over 50% type growth for energy storage. I think coming into the year, consensus had around 20 to 25% growth. So call it, we're going to be more than double the initial expectation. And I think on our numbers, energy storage is around 20% of the market. So it's starting to be quite meaningful. And I think more important than that, we're starting to see some very positive outlooks for 2026. I think some of the initial forecasts that I've seen is calling for around 30% growth for energy storage in 2026. But there's even a forecast that I've seen from a reliable kind of Chinese industry forecaster, which is calling for 60% growth, which if that's the case, that's another 150 to 200,000 tons of demand versus kind of current expectations in the context of consensus modeling in 77,000 ton surplus in 2026 based on the latest average that we've pulled up from all the sell side banks. So there's definitely upside, and I think it probably aligns with our view that 2026 could be a year where we start to reach balance. If not, if we're not there already, given what we're seeing out of energy storage. But I think we're starting to get pretty encouraged for 2026, given the growth that we're seeing.
Sounds good. And I guess the final observation is that there's been a lot of politicking. I mean, Australia and the U.S. Signed an agreement this week, and prior to that, America was supporting Malay. So Australia and Argentina very much in the news, and rare earths and other critical minerals in the news. Did you have any views on what the Australia-U.S. agreement could mean, for lithium projects, and likewise, the Argentine, and if you have any comments on Canada and Brazil as well. There have been some comments that they've been making progress with Carney on a trade agreement. Any views politically on those four geographies?
No comment. No comment.
Hey, sorry about that.
It was so funny. You cut out right at the end of, do you have any comment about those four political geographies? So go ahead and say whatever you want to say about Australia, Argentina, Canada, Brazil, for political perspective.
Sure. So the increasing focus towards critical minerals from the U.S. and recently Australia, we think is a very positive thing, especially also the U.S. I guess financial commitments and supports to Argentina. I think it shows how strategic these countries and these minerals can be to the ongoing growth of whether it's electric vehicles, energy storage, or other kind of critical applications, whether it's defense and so forth. So we think that's very encouraging. We think there's a lot of potential within our portfolio to partner with governments to accelerate development and fund these projects. There's been more talk now in Canada about trying to fast track projects, whether it's benefiting the likes of our Winsome portfolio or Moblan. So overall, I think that there's a lot of hidden value, and with 35 royalties globally, big presence in Brazil and Argentina, Canada, Australia, and even some assets in the southwestern U.S., we think there's going to be a lot of good optionality, especially with the focus that we're seeing on critical minerals and especially lithium, given how important component is to future demand trends.
I mean, they mentioned the use of price floors and possibly building strategic critical minerals reserves. They didn't say this specifically for lithium, but what do you think? You think that we might see a price floor, or the U.S., like they have a strategic petroleum reserve? I've been suggesting this could be a way to, come into the market, push up the price to kind of 20, 25,000. And then if it gets, overheated, they could release, carbonate into the market, at some future time. What do you think? I know it's highly speculative, but
Sure. I think it's possible, but I think that the priorities are probably other critical minerals, whether it's rare earths and some of the I guess commentary we've seen that seem to suggest those are higher on their overall attention list. So I think it's possible, and I'm not sure we'll need minimum price, especially at the bottom of the cycle where we're going to see a recovery where likely incentive prices will return and people and companies can invest. But I think you are going to see increasing attention and potentially new instruments, financing instruments to get involved and in the sector. And I think one of the key highlights for how important this is to the overall kind of AI ecosystem is NVIDIA put out a white paper, I think it was a week ago or 2 weeks ago, where it talked about how energy storage is essentially required for all the new data centers, and as a way to improve the overall functioning of the power and prevent kind of load fluctuation. So given how strategic batteries and the lithium components will be, I think you're going to see some probably new financing structures. So as far as price floors, that's to be determined. I could probably see that in other minerals like we've seen with MP and so forth, but no question there's going to be more financing to the sector.
That sounds great. If you could send me that NVIDIA paper, that would be great. I just went to a conference last Friday, which was based on, distributed energy resources. So it was all about batteries. And I think they were talking, like Sam Altman of OpenAI was talking about needing 250 gigawatts of electricity, like a doubling of electricity. And I forget exactly what time frame. But if you look at natural gas, nuclear, there's not enough of all of those, that the only way to solve it, is through batteries. And it's not solar plus batteries or wind plus batteries. It's also batteries supporting, um, fossil fuel, generated power plants, as is happening at XAI in Memphis. And Elon Musk kind of talked about how his mega packs are, being used in what is, I think, a diesel or natural gas, powered plant. So anyway, that's something I'm keeping very big eye on, because as you mentioned, Ernie and Matt, it's very hard to model battery demand. It's much easier to, ESS impact on battery demand compared to electric vehicles, where you could say, okay, this many cars are going to be sold, this many will be electric, this is the battery size. It's much more opaque in BESS. So like that NVIDIA paper, I'm very curious to read. And if I get that in time, we'll put a link in the description, to that paper. With that, I think we'll wrap up. Ernie, thanks very much. Again, Lithium Royalty is a sponsor to our channel. And we appreciate, that support, but it's a very interesting way to play. We've talked about, apart from the diversification aspect, that we've been big fans of brines or conventional brines in Argentina. And so many of them have gotten acquired over the years that there's not that many left. There's kind of Lithium Argentina, Galan, and, and NOAA. But as you talked at length about, your Trey Q and Mariana, which is run by Ganfeng, if you want to play Argentine brines, Lithium Royalty is a means to do that, in addition, obviously, to their Western Australia, Canada, and Brazilian royalties. And with that, I think we'll say see you soon.
Great. Thanks, guys.
Kobe, welcome back on again. You've had quite a lot of news since we last chatted. If we can just go through each of those. Starting off, you've appointed new advisors to the advisory board. Can you give us some color on that?
Yeah, sure. So Jeremy is a PhD lithium pegmatite expert. He literally wrote his PhD in lithium exploration. And he has been already very helpful. He's helped us behind the scenes a bit. And, he actually recently got back from Brazil. Daniel is out of Europe, and he's got quite an extensive European network, and has been helping us out on things like communication and social media. He comes from a finance background. And recently, what came with the acquisition of the Brazilian company, it was a private company called Brion Minerals, had a total of 30 projects in Brazil. And with that acquisition came the largest shareholder of Brion, who's a guy named Felipe Holzhauer. If anyone is familiar with Equinox Gold, which is now quite a large gold producer, few years ago, Equinox was formed out of the merger of 3 juniors, including a Brazilian gold company called Trek Mining, and that was Felipe's deal. So Felipe's got a great track record. He was, one of the original guys behind Equinox. He's also put mines into production from discovery to production in Brazil, and he's our boots on the ground. He's got lives in Sao Paulo, mining engineer as well. Also has a finance background, and they're very qualified. So he's a new member of our board of directors.
Okay, great. Thanks for that. And another thing that you have looked at is an application for a QB listing. How's that coming along?
Yeah, we expect that to happen very, very shortly. That should be finalized very soon. Right now, we are traded on Frankfurt. We're traded on the Canadian Securities Exchange. I think that what we're trying to do here is bring in opportunities for US-based investors to get liquidity and get exposure to Libra.
Yeah, excellent. And you touched on it earlier. You've done an acquisition in Brazil, Brion. So you mentioned, I think this is quite an extensive array of projects. There is lithium in there. Can you sort of give us a sense of what you acquired and the program to explore that going forward?
Yeah, sure. Actually, the program is already kicked off. As I mentioned earlier, Jeremy was just down in Brazil, just got back there. And what we're doing there is we're sifting through all these projects. Again, the portfolio is a total of 30 projects, so quite a lot to go through. At least 20 of them are more lithium focused. We explored a lot of the Borborema projects, and we are back there. While we're out in that area, we're also on, call it, nearby claims that we're assessing for additional M&A potential. And then we're going to be hitting up the Penelope project, which is in more of a known pegmatite field in Minas Gerais. I think Borborema is more of the underexplored part of Brazil for lithium, even though it actually has current tantalum production. In Penelope, that's Minas Gerais. That's where most of the explorers and producers that we are familiar with are, including Sigma, Lithium Ionic, and Atlas Lithium, Pilbara as well, after buying up Latin. So yeah, we're excited. We've got boots on the ground. The guys are sending photos every day, and I'm liking what they're seeing.
And what sort of exploration work are you doing at this stage, Gabby?
Right now, it's prospecting. A lot of these old pegmatites were mined historically for things like tantalum, and as well as some gemstones. Like Sigma's was like that as well, right? Sigma was a brownfield site, not originally mined for lithium, and there was historic gem mining even at Galena. So there's these old adits where, really, to know what you got before you drill, you got to go into them and have a look underground. It's quite a different environment from Canada. And in Canada, the glaciers scraped these pegmatites clean. So you see, you could see the spodumene sitting there on surface often, right? You don't have to dig to find it or drill to find it. In Brazil, in a tropical environment, you get this supergene alteration. These pegmatites have been heavily weathered, and the lithium is the first to kind of wash away. So you might find some relics of what was once spodumene, but often the pegmatites on surface look kind of like a gravel. It's kind of hard to observe. Further, once you even if you were to assay it, the lithium has kind of washed away. So the lithium at surface doesn't usually grade much. In fact, Sigma Lithium, in their resource statement, they've excluded the top, I forget how many meters, that they excluded the stuff that was close to surface just because the grade was very unreliable. I actually, just to nerd out a bit here. This sample is from a site visit. This is an old relic of spodumene. This is from Brazil, and I can eat. Normally, spodumene is really hard. Like in Canada, it's I can't just snap it in half, but this crumbles in your hand. And if you were to assay this, it would grade very low. So what we're doing on the superficial work is you could still get an idea if it's prospective for spodumene at depth, if there is no adit there, and you could do that by analyzing the chemistry of other elements. Things like the potassium to rubidium ratios that you see on surface provide a good indication if you're in the right type of pegmatite.
And what's your sort of timing on wrapping up the initial analysis?
That'll happen. It'll wrap up closer to year end, and then from there we'll have much better priorities as to a better indication of which projects we actually want to prioritize in Brazil going forward.
Okay, great. Another one that's an interesting one I know you're keen to cover is the maiden prospecting program in Quebec.
Yeah, that's right. So historically, we've been Ontario focused, and all of our boots on the ground have been in Ontario. When we started this journey as a private company, James Bay was so hot that everything was staked up. The whole James Bay region was staked up. So we had our eyes on areas. We acquired one project that we've had since 2023. It just, because we weren't able to have economies of scale, we just kind of, it wasn't worth going to do a program just on our Nemiskow project alone. And then there was this ground that we had our eyes on, and because lithium has fallen so out of favor, people have been dropping their claims now. So a bunch of claims are starting to open up, and we were very quick to stake a project that we had our eyes on and was finally dropped. That's our Waguchi project. We staked it earlier this year, kind of right before we went, right before our go public. So now that we have two projects there, we're thinking, okay, well, field season's not done. Let's get some boots on the ground there. We've identified pegmatite targets from satellite imagery. And it's as simple as let's go spend a week in a helicopter landing pegmatite to pegmatite target. The exposures that we see from satellite imagery are quite large. If you have a wide pegmatite, it usually correlates to a pretty large deposit. The question is, well, is there lithium inside this pegmatite? So it's what I love about lithium exploration is what you have much earlier on in the exploration cycle, right? It's not like gold or copper. Like with lithium, you can really gauge the size of the prize very early on for a very low cost. So we can get a good sense of what we have in Quebec after this program.
And Kobe, you mentioned Ontario earlier. That's, of course, where you have the cobalt earn-in agreement. How's your 2025 field season going there?
Well, that just wrapped up now that the field season for the cobalt projects is done. That wrapped up. We have several results, several samples that are currently in the lab, and we hope to release that to market once we get all the assay data back. Yeah, just to recap there, we were heavily involved in the exploration program that was commissioned by Kobold. Kobold being the ones earning into 3 of our Ontario projects. So the Kobold arrangement covers, again, we have a total of 37 projects. Kobold covers 3 of those projects currently under a 6-year option. We did press release this earlier. They did hit that initial first year minimum commitment. We are not currently at a year yet, so they did spend at the minimum $750,000. And it's all superficial work. We're still in the early innings of this 6-year earn-in agreement with Kobold.
Right, but yeah, I mean, solid partner with a big commitment. The total, Kobe, if I'm correct, is 33 million.
Yeah, across all 3 projects during the full 75% stake, they would need to put $33 million to work in the ground. To my knowledge, we're one of 2 publicly listed companies that has an active earn-in agreement with Cobalt. The other one being a more known about explorer in Finland called Orion. It's a plus 100 million market cap, and the less known about Libra Energy Materials, which only recently went public, and as Howard indicated, we're approximately a 10 million market cap.
And then lastly, from my side, Kobe, you've Athena Gold, which is a portfolio company of yours. They've re-domiciled to Canada and doing some progress. Obviously, gold has had a phenomenal run. You hold just under 44 million common shares. What's the plan with that stake? Is it to run it a bit further? Will that represent liquidity for you to reinvest into the rest of the portfolio? What is your thinking there?
That paper, does it belong in Libra over the long term? Probably not. You know, as it's not like we really get much value for it. I think trying to find a way to liquidate it right now before this company actually drilled what I think is one of the most compelling pre-discovery gold targets out there would be unwise to do.
Sure. So, I mean, you want to move a little bit along the Lassonde curve here on this one.
Yeah, we want to give we want to give this company a chance to make a discovery. And last thing I want to do is be a burden on anyone's cap table, right? So, we're here to be supportive shareholders, and when the time is right, when it makes sense, yes, we can. It's worth over $2 million of paper, right? So, when the time is right, yes, we will liquidate that, but we will do so in a way that does not damage Athena.
Okay, great. Howard?
Okay. Thanks a lot, Kobe.
All right.